Hello, welcome to CATEX TV. This is a broadcast from Princeton, New Jersey. My name is Frank Fortunato with CATEX. Today is Thursday, July 14th, 2011. July 14th is Bastille Day, anniversary in France of the event in 1789 when mobs of Republican-oriented Parisians attacked the Bastille prison, demanding the release of political prisoners, which they subsequently obtained by virtually destroying the building. And that began the French Revolution. In the United States, there's still a budget revolution going on. President Obama and the congressional leaders met yesterday. The talks ended without any resolution. And according to press reports right now, the president is considering summoning the entire group to Camp David for the weekend, where he's going to lock them up in the Maryland mountains until they can emerge with some sort of agreement. As if to amplify the crisis, Moody's Investor Service put the United States sovereign risk on watch, credit watch. So that sort of exacerbated everybody's attention here. Meanwhile, back to our news. Just before we, just when we went off the air yesterday, there came news of a rush hour series of bombings in Mumbai that ended up killing about 17 people, injuring well over 150. Mumbai is India's financial capital, located on its west coast. Investigators today are combing through the blast sites looking for clues. Nobody has claimed responsibility yet. The Indian security group refuses to speculate which terror group might have in fact carried out the attack, although they did say there was no intelligence that there would be any attacks before the explosions. The Indian officials are saying that ammonium nitrate was used in the bombs and that there was a timer involved rather than a remote trigger. The three explosions were very closely coordinated. They happened within several minutes of one another in heavily trafficked areas of the city at rush hour Wednesday night. According to the Indian security minister, these were not crude bombs, but sophisticated devices. Only someone who has training can assemble those devices. In the United States, the Hartford up in Connecticut warned that they're going to have a second quarter profits warning on cat losses and an asbestos charge. The Hartford said it expects to report net profits next month of $24 million, down from $76 million for the same period last year, largely as a result of a $447 million pre-tax loss burden from catastrophes, as well as a $290 million reserve increase pertaining to legacy asbestos liabilities. The cat losses, of course, arose from 12 events, with 60% of the total incurred in its personal lines division, and the rest came from its commercial book. The insurer said that the reserve increase was driven by higher frequency and severity from mesothelioma claims, particularly against smaller, quote, more peripheral insureds. There was also a $73 million after-tax charge for the write-off of capitalized costs associated with a discontinued policy administration software project. Hartford CEO Liam McGee said that the Q2 results were affected by U.S. catastrophe activity and were unrelated to the fundamental performance of the underlying business. Well, despite the shenanigans going on in Congress, the U.S. economy seems to be steadily improving. New applications for unemployment benefits in the U.S. fell last week by 22,000, down to 405,000. This is the lowest level in 3 months. Economists had been expecting an increase up to 420,000. It's a 15,000 difference there. The decrease would have been even bigger had the state of Minnesota not shut down. Of course, that shut down and put 11,500 workers out on the unemployment lines filing for jobless benefits. Also, U.S. wholesale prices fell about 0.4% last month, mainly due to the decrease in oil. Economists had been predicting a 0.4% increase in the producer price index, so that's almost a whole 1-point swing. Meanwhile, sales at American retailers increased 0.1% in June. Forecasters had been looking at a 0.2% drop. So we'll see what the stock market does with that. Undoubtedly, it won't do too much because they'll be focused on the sovereign risk discussion going on at the White House. Allstate recorded $300 million of cat losses in June. This makes its Q2 total $2.3 billion. This includes previously announced losses for April and May. To date, Allstate has posted the largest share of losses from the second quarter U.S. cat events ahead of even its rival, State Farm. State Farm's most recent update was about $1.75 billion, but is soon going to exceed $2 billion. AM Best has downgraded the debt ratings of two of Montana Re's variable rate notes. The ratings agency downgraded the debt rating on a $100 million series 2009 Class A and a $75 million series 2009 Class B. Both notes are due December 7, 2012. The notes provide protection for Flagstone Re against U.S. hurricane and earthquake. They were downgraded following the release of RMS version 11 U.S. hurricane model. AM Best said that the recently submitted new probabilities from RMS version 11 showed a, quote, significant increase when compared with the probabilities calculated on initial models. Nothing happened on the ground. It was just the evaluation mechanism used to look at the ground has changed. Well, as the world turns, transatlantic shareholders are supposedly now likely to favor the Validus bid. Investors at the New York headquartered reinsurer Transatlantic reacted positively to the news. Validus investors apparently took a little bit of a dimmer view. They drove the Validus stock down about 9%, closing yesterday at $28 on the New York Stock Exchange. Transatlantic shareholders hold the key to the success of Validus's unsolicited approach. You might recall that they haven't yet voted on the Allied World bid. Validus's offer of total consideration of about $56 per transatlantic share, plus an $8 per share special cash dividend, represents a 12% premium to the Allied World bid. But Allied bid has to be refused by the transatlantic shareholders first because it's a management recommended deal. You might recall that last month Transatlantic's biggest shareholder, Davis Selected Partners, which has about a 10% voting stock, announced that it had very serious concerns about the Allied World proposal to take them over. Other leading transatlantic investors include BlackRock, Vanguard, and J.P. Morgan. People on Wall Street are suggesting that those shareholders are likely to favor the rival Validus approach. One investor told the Insurance Insider, transatlantic shareholders are way better off with the Validus deal. Just look at the stock market reaction. They stand to make substantially more, and if they don't want to pay taxes, they can simply hold on to the Validus shares. We'll see what happens. That's sort of equalized a little bit when the stock market's closed. AWAC stock and transatlantic stock and Validus stock began to make moves so that the two bids actually were coming in relatively equal from what we're reading. We also mentioned earlier in the week that Thompson Heath & Bond, the London-listed broker, is now apparently the object of pursuit from the big American wholesale house AMWINS. Well, apparently the deal's not final, and if you're Thompson Heath & Bond, before the deal is final, you're obviously trying to get a better price. Here's some interesting news. THB announced today that pre-tax profits for the first 6 months of the year actually to April 30th have doubled to 1.9 million pounds. The Insurance Insider revealed on Tuesday, and we reported that THB and AMWINS were in advanced talks. The London wholesale broker THB also announced that its revenues had strengthened 6%, and they also pledged to continue their acquisitive strategy. Now remember, this is a company that is apparently the subject of a takeover talk by a much, much bigger group. They're announcing an increase in their profits. They're announcing a continued pursuit of their acquisitive strategy. Frank Murphy, THB's CEO, said he was confident about the broker's future, whatever the outcome of discussions with AMWINS. He said, we've seen impressive growth in our international division. Nigel Morehouse, the non-executive chairman at THB, said that we remain an ambitious acquisitive company. We're highly selective. Nonetheless, we remain sure that complementary businesses are to be found in the London insurance, broking, and MGA markets. Interesting. If you're AMWINS, you're reading that and you're saying, I know what this is about. In the English Channel, or actually under the English Channel, earlier today, there was an earthquake. It was the biggest earthquake to strike that area in 300 years. It was not a particularly gigantic earthquake. It occurred at about 8 a.m. This morning. It was about a 3.9. According to the British Geological Survey, there are events like this in this area only every 300 years. Did a little shaking down in southeastern England, caused no damage, no injuries, but it did get everybody's attention. Biggest earthquake in Britain apparently was a 7.1 about 400 years ago. So it was nothing approaching that. If we have any breaking news, we'll come back and tell you. In the meantime, thank you for watching, and we will see you tomorrow.